Are you dreaming of a more secure financial future? Do you long for the peace of mind that comes with knowing your money is working for you? Building wealth and achieving financial freedom is a journey, and like any journey, it begins with a single step. The good news is that you don't need to be a financial expert to start building a brighter future for yourself and your loved ones. With the right knowledge and a commitment to making smart choices, anyone can create a solid foundation for lasting financial well-being. In this fast-paced world, it's easy to feel overwhelmed by the complexities of personal finance. But I'm here to tell you that building wealth doesn't have to be complicated. By understanding the basic principles of assets, liabilities, and investing, you can take control of your finances and start building a future filled with possibilities. This guide will provide you with the tools and knowledge you need to embark on your wealth-building journey. We'll explore the fundamental concepts of assets and liabilities, delve into proven investment strategies, and equip you with practical tips to avoid common financial pitfalls. Remember, the journey of 1,000 miles begins with a single step. Let's take that first step together and start building the financial future you deserve. Before we dive into the exciting world of investing and wealth creation, it's crucial to understand the fundamental building blocks of financial well-being: assets and liabilities. These two elements form the bedrock of your financial health and are essential concepts that everyone, regardless of their financial literacy, should grasp. These two concepts are the yin and yang of personal finance, and grasping their differences is paramount to making sound financial decisions. Without a clear understanding of what constitutes an asset versus a liability, you might find yourself making choices that could hinder your financial growth rather than help it. Simply put, assets put money in your pocket, while liabilities take money out. This fundamental distinction can guide you in evaluating your financial situation and making informed decisions about where to allocate your resources. Assets are items you own that have the potential to generate income or appreciate in value over time. They are the financial tools that can help you build wealth and achieve financial independence. Think of them as your financial workhorses, steadily growing your wealth even while you sleep. Examples of assets include stocks, which are ownership shares in publicly traded companies. When you own stocks, you essentially own a piece of the company, and as the company grows and becomes more profitable, so does the value of your shares. Real estate, which includes properties you own from rental homes to commercial buildings. Real estate can provide a steady stream of rental income and can also appreciate significantly over time, adding to your net worth. And businesses, ventures you create or invest in that generate profits. Owning a business can be one of the most effective ways to build wealth, as it allows you to leverage your skills and creativity to generate income. On the other hand, liabilities are financial obligations or debts that require you to pay money out of your pocket. These are the financial commitments that can drain your resources and limit your ability to invest in assets. These are your financial burdens, constantly chipping away at your income. Common liabilities include mortgages, which are loans taken out to purchase a home. While owning a home can be an asset, the mortgage itself is a liability until it is paid off. Loans taken out to purchase a home, which can be a significant financial commitment that requires careful planning and management. Car loans, debts incurred to finance a vehicle purchase. While a car can be a necessary expense, the loan you take out to buy it is a liability that needs to be managed. And credit card debt, unpaid balances on your credit cards. High-interest credit card debt can quickly become a financial burden if not managed properly. Understanding the difference between assets and liabilities is like learning the rules of a game. Once you know the rules, you can start to play strategically, making moves that will help you build wealth and achieve your financial goals. Once you grasp the fundamentals, you can start making strategic moves to acquire more assets and reduce your liabilities. This involves careful planning, disciplined saving, and smart investing. This shift in mindset is the cornerstone of building wealth. By focusing on acquiring assets and minimizing liabilities, you can create a solid financial foundation that will support your long-term financial success and security. Building lasting wealth requires more than just understanding the mechanics of assets and liabilities. It's about developing a comprehensive approach to managing your finances that goes beyond the basics. It demands a shift in mindset, a fundamental change in how you perceive money and its role in your life. This transformation from a consumer to an investor is crucial. Instead of focusing on immediate gratification, you start thinking about long-term benefits and how today's decisions impact your future. This shift involves embracing a set of principles that guide your financial decisions and empower you to make choices that align with your long-term goals. It's about creating a roadmap for your financial journey. Here are some key aspects of cultivating a wealth-building mindset. Set clear financial goals. These goals act as your financial North Star, guiding your decisions and keeping you focused. Define what financial freedom means to you. It's not just about having money, it's about having the freedom to make choices that enhance your quality of life. Whether it's retiring early, traveling the world, or securing your children's education, having clear goals provides direction and motivation. Embrace budgeting. A well-planned budget is the foundation of financial health. Track your income and expenses diligently. This practice helps you understand where your money is going and where you can make adjustments. A budget is not about restriction, it's about awareness and control, allowing you to allocate your resources effectively. Commit to continuous learning. The financial landscape is always changing, the world of finance is constantly evolving. Stay informed about market trends, investment strategies, and emerging opportunities. This knowledge will help you make informed decisions. Stay informed about market trends, investment strategies, and emerging opportunities. Read books, attend seminars, and follow reputable financial experts. Seek mentorship. Read books, attend seminars, and follow reputable financial experts. Seek mentorship. Connect with individuals who have achieved the financial success you aspire to. Connect with individuals who have achieved the financial success you aspire to. A mentor can provide invaluable guidance, support, and accountability. A mentor can provide invaluable guidance, support, and accountability. They can help you navigate challenges and stay focused on your goals. By adopting these principles and consistently applying them to your financial decisions, you'll find yourself naturally gravitating towards opportunities that build assets and enhance your financial well-being. It's about creating a sustainable path to wealth. Remember, building wealth is a marathon, not a sprint. It's a journey that requires patience, discipline, and a long-term perspective. It requires patience, discipline, and a willingness to embrace a long-term perspective. Stay committed, stay informed, and stay focused on your goals. Your future self will thank you. The stock market can seem like a daunting and complex world, but it's one of the most powerful engines for building wealth over the long term. Many people are intimidated by the jargon, the numbers, and the fast-paced nature of trading, but with the right approach, it can be a rewarding experience. Don't let fear or intimidation hold you back from harnessing its potential to grow your money. The key is to start small and gradually build your knowledge and confidence. With a little knowledge and a strategic approach, anyone can become a successful investor. It's not about making quick money, but about making informed decisions that will benefit you in the long run. Here's a beginner's guide to navigating the stock market. Start with education. Knowledge is power, and the more you know, the better equipped you'll be to make smart investment choices. Before investing a single dollar, take the time to educate yourself about the basics of the stock market. There are countless resources available, from books and online courses to seminars and financial news websites. Understand different investment vehicles like stocks, bonds, and mutual funds. Each has its own set of risks and rewards, and it's important to know how they work. Determine your risk tolerance. How much risk are you comfortable taking with your investments? This is a crucial question because it will guide your investment strategy and help you avoid unnecessary stress. Your risk tolerance will influence the types of investments you choose and how you allocate your portfolio. Choose your investment strategy. Are you looking for steady, long-term growth, or are you interested in more aggressive, short-term gains? Are you a buy-and-hold investor who prefers long-term growth, or do you thrive on the excitement of active trading? Each approach has its own merits and challenges. Select a strategy that aligns with your goals, risk tolerance, and time horizon. Diversify your portfolio. Diversification is a key principle in investing. Don't put all your eggs in one basket. By spreading your investments across different asset classes, industries, and geographies, you can help mitigate risk and improve your chances of achieving your financial goals. Spreading your investments across different asset classes, industries, and geographies can help mitigate risk. This way, if one investment performs poorly, others may perform well, balancing out your overall portfolio. Start small and be patient. Investing is not a get-rich-quick scheme. It requires time, patience, and discipline. You don't need a fortune to start investing. Begin with a small amount that you're comfortable with, and gradually increase your contributions over time. Even small, regular investments can grow significantly over the years. Begin with a small amount that you're comfortable with, and gradually increase your contributions over time. Consistency is key, and over time these small investments can add up to a substantial amount. Remember, investing in the stock market is a marathon, not a sprint. It's about making consistent contributions over time and letting the power of compounding work its magic. It's about making consistent contributions over time and letting the power of compounding work its magic. The earlier you start, the more time your investments have to grow. So, take the first step today and start your journey towards financial growth and security.